The world of cryptocurrency is one of constant innovation, speculation, and quite often unexpected surprises. Among the myriad of cryptocurrencies vying for dominance, Cardano ADA has consistently stood out as a project with grand ambitions. However, despite its impressive technological advancements and a strong community, ADA has found itself struggling to gain the upward momentum that many investors had hoped for. Currently, ADA is navigating through turbulent waters with its price sitting within a falling wedge pattern that has left traders and investors on edge. But as with any story in the crypto world, a new chapter is always just around the corner. The latest plot twist for Cardano comes in the form of a proposal that could potentially burn 1.5 billion ADA from the treasury. This proposal, if adopted, could be the lifeline ADA needs to recover from its recent slump and possibly trigger a significant price surge, some speculate as much as 23%. With the broader crypto market itself facing a whirlwind of volatility, the question on everyone's mind is whether this proposed treasury burn could be the catalyst that propels ADA out of its current downtrend and into a new era of growth. To fully appreciate the implications of a treasury burn, we first need to understand what token burning entails. In the simplest terms, token burning refers to the process of permanently removing a certain amount of cryptocurrency from circulation. This is typically done by sending the tokens to a burn address, which is an address that no one has access to, thereby rendering the tokens irretrievable. The logic behind token burning is straightforward. By reducing the total supply of a cryptocurrency, the scarcity of the remaining tokens increases, which in theory should drive up their value assuming demand remains constant or grows. For Cardano, the idea of burning 1.5 billion ADA from the treasury was proposed by Big Pay, a well-known figure within the Cardano community. This proposal is particularly noteworthy because as of now, the Cardano community holds the reins of the blockchain through full-on chain governance. In other words, the community has the power to decide whether or not to execute this burn, making it a true test of decentralized decision-making. The proposed burn would reduce the total circulating supply of ADA by approximately 3.3%. which is no small figure. Proponents of the burn argue that this move could create a scarcity effect, potentially driving up ADA's price, especially in the current market environment where every bit of positive news can have an outsized impact on prices. As with any significant proposal in the crypto space, the idea of burning 1.5 billion ADA has sparked a range of reactions within the Cardano community. On one end of the spectrum, there are those who are fully behind the burn proposal. They argue that reducing the supply of ADA, particularly in such a substantial manner, could be just the boost the price needs to break out of its current downtrend. These supporters believe that a successful burn could set the stage for a more sustained price rally, especially if it coincides with broader positive developments in the crypto market. However, not everyone is convinced that a burn is the right move. Some community members have suggested alternative approaches that might achieve similar outcomes without permanently removing such a large amount of ADA from circulation. One such suggestion is to lock up 75% of the supply, rather than burning it. Locking up the tokens would reduce the circulating supply in a similar way, but would offer the flexibility of reintroducing the tokens into circulation if needed in the future. This approach, they argue, would be a more prudent and flexible strategy that doesn't close off potential future avenues for utilizing the AD treasury. Then there are those who are outright skeptical of the burn proposal. These critics argue that a burn would primarily benefit short-term investors looking to capitalize on a quick price bump, rather than contributing to the long-term health and growth of the Cardano ecosystem. They caution that focusing on tokenomics and supply manipulation could distract from more fundamental efforts to build out Cardano's infrastructure, foster adoption, and drive real-world utility. Amidst this debate, Cardano's founder, Charles Hoskinson, has also weighed in, albeit indirectly. Recently, Hoskinson made some pointed remarks about Bitcoin's future, suggesting that Bitcoin could be better utilized on chains like Cardano. While these comments were not directly related to the treasury burn proposal, they add an interesting dimension to the discussion. Hoskinson's vision for Cardano is one where it doesn't just compete with other blockchains, but rather where it becomes a foundational layer for a wide range of decentralized applications and digital assets, potentially including Bitcoin. Hoskinson's remarks highlight a broader trend within the crypto space where the lines between different blockchains are increasingly blurred. Cross-chain compatibility, interoperability, and the ability to host and utilize assets from different chains are becoming key competitive advantages. If Cardano can position itself as a preferred platform for assets like Bitcoin, it could open up entirely new markets and use cases, driving demand for ADA in the process. This broader context is crucial for understanding the potential impact of the treasury burn and other developments on ADA's price. Turning our focus back to ADA's price action, it's clear that the token has been facing significant headwinds. ADA is currently trading within a falling wedge, a pattern that technical analysts often view as a bullish reversal signal. However, despite the potential for a breakout, ADA has continued to drift lower, recently dropping by 2.1% over a 24-hour period to trade at approximately $0.322. This decline is part of a larger downtrend, with ADA losing about 6% of its value over the past month. The broader cryptocurrency market has also been under pressure, with Bitcoin's price slipping below the $57,000 mark, contributing to a more cautious market sentiment. For AD, the key levels to watch are the support around $0.30 and the resistance around $0.34. A breakout from the falling wedge, especially if accompanied by a surge in trading volume, could signal a shift in market sentiment and potentially lead to a more sustained price recovery. Adding another layer of complexity to AD's price dynamics is the recent chain hard fork. This major upgrade to the Cardano network is designed to improve scalability, security, and overall performance. However, as with any significant network upgrade, it takes time for the market to fully digest its implications. While the hard fork itself is a positive development for Cardano's long-term prospects, the market's initial reaction has been somewhat muted as traders and investors wait to see how the changes will play out in practice. The chain hard fork is particularly relevant in the context of the proposed treasury burn because it underscores the ongoing evolution of the Cardano network. As the network continues to grow and improve, the question of how best to utilize the AD treasury becomes even more pertinent. A successful hard fork, combined with a well-executed treasury burn, could create a powerful 1-2 punch that propels ADA to new heights. Conversely, any missteps in these areas could exacerbate the current downtrend. As ADA approaches the end of the falling wedge pattern, the clock is ticking for the token to make a decisive move. If ADA breaks to the upside, the price could surge by as much as 23%, potentially reaching the $0.40 target. However, on its way up, ADA is likely to encounter resistance around the $0.35 and $0.37 levels. These are critical points to watch as they could determine whether a breakout turns into a sustained rally or whether it fizzles out. On the flip side, if the selling pressure remains strong, there's a risk that the falling wedge could break to the downside, leading to further declines. In this scenario, the proposed treasury burn could either act as a last-minute lifeline or be too little too late. The outcome of the community vote on the treasury burn will be a crucial factor in determining ADA's next move. If the burn is approved and executed, it could create a bullish catalyst that ignites a new rally. However, if the proposal is rejected or fails to gain enough support, ADA may struggle to find the momentum needed to reverse its current trajectory. The proposed treasury burn, the recent chain hard fork, and the broader market dynamics all present both risks and opportunities for ADA holders. For investors, the key takeaway is to stay informed and be prepared for various outcomes. The decision to burn 1.5 billion ADA from the treasury is a critical one that could have far-reaching implications for the price of ADA and the future of the Cardano network. Whether you're a long-term believer in Cardano's vision or a short-term trader looking to capitalize on price movements, the coming weeks will be pivotal in shaping the future of ADA. The information provided in this video is for educational and informational purposes only and should not be considered financial advice. Cryptocurrency investments are highly speculative and involve significant risks, including the potential loss of your entire investment. You should conduct your own research and consult with a qualified financial advisor before making any investment decisions. The creator is not responsible for any losses or gains incurred as a result of